Let's move on internationally to a story that's coming in by the way of US GDP growth numbers. GDP growth accelerating to nearly 2.4% in the second quarter. Good numbers there as far as expectations is concerned.
Yes, and it started in springtime and it is up to 2.4% in the second quarter, up from 2% in the first quarter. So it has been rising steadily. It is on the back of investments in manufacturing and consumption. Spending rose 1.6%. Goods are up 30% from 2017. The growth in goods slumped in 2020-2021 to below 10% growth. Services are up above 10%, which went down to minus 10% during the pandemic times. So things are looking. Tech companies who were laying off during the same time, people in tens and thousands of employees, they seem to be a very small percentage of the total base. Housing sector was in deep stress. Despite that, consumer prices were up 2.6% during this time. But in the first quarter, they were 4.1%.
Okay.
So all these things are looking good for them. And one more thing that we should look at, which India looks at, that we are getting manufacturing and we are a developing country. Manufacturing investment has been the most in the US in almost 4 decades. So even a developed country like the US is getting manufacturing back to its shores.
All right.
And that is where this whole growth is riding. People are calling it Bidenomics.
Bidenomics, interesting term there, similar to what we call back home Modinomics. But essentially, this growth riding on the back of manufacturing, Krishna, is important because it allays fears of stagflation. We know inflation is higher than what Feds would like it to be. There was a rate hike just about a day ago, 24 hours ago India time, and now growth coming in at over 2%, 2.4% is good news because it allays fears of stagflation. There is inflation, but there's also growth, so that's good news.
So absolutely. Unfortunately, global equities have fallen ever since that piece of news have come out. Markets are down across the world because of 2 rate hikes that have happened. Yes, the GDP data from the US is very good. And it's good for the US economy, should send better figures. But what has happened is that with that inflation not being under the levels, bear in mind, according to the US Federal Reserve, the inflation is double of its target. It wants inflation in the US to be 2% or less. Right now, it's over 4%. So that is the reason why you witness that rate hike from the US Federal Reserve, the American Central Bank. And then that was followed up by a rate hike by the European Central Bank as well, in the European Union. So 2 of the biggest, most developed economic blocks have gone ahead with the rate hikes and not paused on their rate hike cycle. And that has spooked markets, just to put things in perspective. But in the meanwhile, the good news is that the US economy has grown at nearly 2.5% and mainly driven by consumer spending. And also by business investments, where more businesses in America are willing to invest and expand. So these are great signs as far as the US economy is concerned and should send out good signals about the global recovery post-pandemic. And I'm really hoping that the inflation news sort of wears off, and the news about the strength of the US economy and the increased spending by state and local governments in the US, all of this leads to a sustained recovery for the global economy, and specifically speaking India, and also that benefiting India and its global trade as well.
All right. Inflation, of course, continues to be a worry. Inflation way higher than the growth rate in the US, not just in the US, but also in Europe, where ECB, the European Central Bank, has also raised interest rates. Inflation is going to be a menace that many, many countries are going to continue to exist, and they'll continue to fight, not just here in India, but in the US, in Europe, all across the world. So inflation becoming one of the major sort of challenge for global economies.
Having said that, consumer prices in the second quarter rose only 2.6%. They rose 4.1% in the first quarter in the US. And personal income, after adjusting for taxes, rose 2.5% in the second quarter. So personal income, the net income, cash in the hands of people in the US is rising consistently, and therefore the spending, and therefore the positive sentiment towards investment. Because the markets are growing.
All right. So consumer spending continues to rise in US. We will, of course, keep tracking all those details globally as well as here in India. Thanks very much for watching.